Hi guys, so with a lot of efforts, I've been able to make my own trading strategy and I want to talk about it in this video. So this is also a reminder for myself in case I forget my own strategy and I'm not sticking to the plan. This is also a video where I can myself come back to and tell myself, okay, like this is the plan you have to follow. So the strategy is very simple. It's based on supply and some demand zones. And let me show you what I've written down. So I've already written my strategy over here. Okay, so this is more like this. So this is more like generic advice of what I should do or what I should not do, and this is more related to my strategy. Okay, so just for your information, um, I'm not a financial advisor. This is just for myself, and I'm not teaching you anything. I'm just showing you what I'm doing for myself. So, to give you a little bit of context, I've been working or I've been looking at the market for a long time now. Let me just show you my console. Okay, so this year I did not take any trades, as you may see, but I have been um, taking trades, or I have been active in the market since July or since June 2022. So let me just go back over here. Okay, I'll show you how much money I've made in each asset. As you may see, the most money that I've made is actually from equity. I've made about 14,000 from equity. I've lost about 2.5k, and but I made about 15k. So around and about, I've made about 12k from the market. Okay, which is very good, which is a very good money. Considering that this money was there only for a few months, and now going to futures and options. Okay, I've lost about 6,000. Okay, I don't know why I just put so much money, but I did put a lot of money, so I lost a lot of it. And this is just from trading on one single day. Okay, and then if we talk about my mutual funds investment, so I've made about roughly 5,000 from it. I mean, I've already taken out like 4,000, so about 5.5 thousand, right? 5.5k or thousand. That's how much I made from investing in mutual funds. So if I think about it, so I've made about um, like 17-18 thousand from the markets in 3 years. But at the same time, I have been passively watching the markets. I have been passively learning about trading, investing, and what not to do and what to do. And now we're back at this. Okay, so right now I'm able to save about 75% of my income, and previously I was putting everything into, FDs. So which I plan to change now. So now what I would be doing is I would be putting 25% of this into my SBI liquid fund. It gives similar returns to an FD. Okay, and I'll I'll be using about 25% of it to trade options. Okay, and then I'd also be using some of it to put into stocks. In this video, I want to focus more on the trading options part of my income. So I'll just quickly remove these drawings and I'll jump to my strategy. Okay, so my strategy revolves around supply and demand zones. So I use a very simple so I'm going to use a very simple supply and demand trading strategy. It's all written down over here. You can use it too if you'd like. So here are a few basic tips and tricks. For example, always trade. Like, these are very obvious beginner friendly tips and tricks, like always trade in the direction of the trend and have a good amount of reward to risk, because if you keep losing your money, it's not good at all. Walk away when the market is unclear or it's giving you unclear signals. You can pause the video and read these once, but I'm not going to talk about the do's and don'ts right now, because these are more general beginner friendly tips. I'm going to talk about my trading strategy. Okay guys, so as you may see, so I follow a very simple strategy, and it's called SMC, Smart Money Concepts, and it's a trading strategy, and I just use two indicators. I'll just focus on one indicator right now. I don't use volume indicators, I don't use anything else. I'm just gonna focus on one indicator right now, because all the other markings in the chart are made by me. And right now we're looking at Nifty 50. We're looking at the chart of Nifty 50, and what this indicator, like, I can do this by myself as well, but this indicator is a break of structure or a market shift indicator. So whenever the market is in an uptrend, or the chart is in uptrend, it shows that, okay, so we can look over here. The market was in uptrend on the 15-minute chart, and we can see that it's breaking its structure again and again. But over here, okay, it forms a lower low. Okay, it forms a lower low and it breaks the market structure. So now we can see that market is, like, here it's in downtrend. Over here, the red line which says BOS means that it's breaking the previous lower low and it's making a new lower low. So now over here the market was in a downtrend, but according to the latest trends, the market is in uptrend. Okay, so I'll tell you the simple strategy. The strategy is very simple. Okay, if you just zoom in the chart a bit, okay, you will see that there is a big candle forming over here. Okay, and before this big candle there is another candle that is formed. So this candle is basically the decision making candle. Okay, and over here there is a fair value gap being formed. Now you may ask what a fair value gap is. So the wick of this candle and the wick of the third candle from over here, or the second, not third actually, this is the first candle after this wick is formed, and this is the second candle after the wick is formed. So after a candle is formed, if there is a displacement of, or if there is a large movement in the market, right, it's a good sign. And if there is a large gap between the wick of this candle and the wick of this candle, Okay, so for example, if this candle would look like this, right, we won't take this trade, because this candle is like above, because this wick is above the previous wick, so we wouldn't take this trade. But as we may see that there is a gap, so this gives us a good entry point, right? Now since the market is, okay, if we just zoom out a bit, let me just, so since the market was in downtrend over here, right, we look for supply zones. So whenever there is a decision candle like this, right, we'll call it a supply zone, right? We can mark the area with this candle, and what we look now is, what after a decision candle is formed, right, we'll wait for the chart to go down, and then we'll wait for it to go back, right? And the moment it enters this zone right over here, right, we'll put our money right here, and we'll aim for the swing low or the swing high. In case of supply zone, a swing low. In case of a demand zone, a swing high. Okay, and to further refine our strategy, after we've made our markings on a 15-minute time frame, we'll zoom in to the 5-minute time frame. Okay, and the moment a 5-minute candle, so let me make this more simple. Okay, so the moment there's a 15-minute, so once we've made our markings on the 15-minute time frame, okay, we'll go into the 5-minute time frame, right? We'll wait for the target to reach over here, and then once, as soon as there is a candle, that a 5-minute candle that crosses this, the zone that we marked in 15-minute, okay, we'll put our money. Okay, so technically, so right now if we look at it, right now our risk to reward ratio is 5.54, and we're risking about 25 points. But if we look at this, oh no, wait, but if we look at this, and we would have put our money right over here. Okay, now if you would have entered the trade right over here, right, now our stop loss is just 8 points, 8 to 10 points, and our risk to reward ratio is now 18 times, right? It's like 18.83, which is an excellent risk to reward ratio. The risk is minimal and the reward is great. We're targeting about 157 points. Okay, but we keep it how it was before. Okay, so just in case, the worst case, you entered the trade over here, you'll still make a good amount of money. You're still targeting 140 points, and then it does not always work each time, but let's just try to see what happened over here. Okay, we basically want to increase our risk to reward ratio, but at the same time we also want to increase our profitability, or increase our you know win rates. And the trades that we lose, we do not want them to affect us. I'll take another example. Over here, this is a losing trade. Okay, but over here, right, there's a large displacement. Okay, once this displacement is formed, there is a decision candle. We're on the 15-minute time frame, so there is a decision candle. Okay, and there is another candle with a good amount of fair value gap. Okay, so we're going to mark our zone. Okay, let me just, this trade I'm going to mark it one by one for you. So we're going to mark our zone. Okay, and we're going to mark it right over here. So what we're going to do is now we're going to switch to a 5-minute time frame. Okay, and our our swing high, this should be our target. This should have been our target. Okay, so as you may see right over here, the market, the market comes over here, it forms over here it was a supply zone, and since now we're in the buying zone, since there's a market shift, market structure shift, so now we're in the uptrend, right? So we'll always follow the trend, that's the rule. And over here, so we'll do the same thing. Now we're on the 5-minute chart. Okay, and the market is rising up, up, up. Okay, and right over here, so this is the first time where a candle is closed in in this range. It also enters this zone over here, but on a 5-minute time frame, this is the first time it enters the market over here. So then we'll again just wait. Okay, now if you enter the market right over here, our stop loss is 7 points and our target is 130 points. So we wait, and what we've we've lost like 10 points, like 7 points. So over here we're making 140 points and we're losing 7 points. So big difference. So yeah, this is going to be our strategy. So again, over here you can see, right, I'm just predicting the market for Monday, but if you look at this right over here, there's a candle, there's a quite large fair value gap. Okay, and the market is in uptrend on the 15-minute time frame, and most likely what will happen is it will probably make a new high, it will come back, we enter the trade, and then we'll finish our trade over here. But there's a slight twist. Since this is Nifty and Tuesday is the expiry for Nifty, we're not going to trade on a Tuesday or a Monday on like in Nifty. So we're going to look for patterns over here in the Sensex. So the Sensex and the Nifty follow very similar pattern, but you may see a similar pattern forming over here. So once so this is our prediction for Monday. Okay, this is going to be our swing high. Okay, so we're going to jump to a 5-minute time frame, and the moment any candle reaches over here, we're going to take a trade. We're going to wait for the market to hit here, and then once it does, we'll exit a trade. In case it backfires, we'll have a trade over here. So in worst case, and now let's say over here our risk to reward ratio is about 2.69. okay, but if we entered the trade right over here, our risk to reward ratio is increased like greatly, and the points that we are risking are also increased, or like the points that we are risking also decreases. And from risking 90 points, we're down to risking like 56 points. And so does our risk to reward ratio. We can also, we might just win 273 points. So yeah, let's see how this goes. I'll give you an update on Monday. And to practice my trades, I use Sensible. Okay, over here you can add orders, and you can simply just buy whatever you want to buy and just put add, and then just add it right there. So right now I'm just using this mode to test out my trades, but once my salary hits for this month, I'll be making trades like on the real market. And yeah, pretty much. But this is a video for me, and hopefully if I make any mistakes, I'll come back to it. And other than this, there were 2 points, and all of this is just written down, so even like I can just look at this and keep my trades. So other than this, there are a few liquidity points that I like try to mark, or I keep in mind. So one of them being equal highs or equal lows. So if I just zoom out the map, zoom out this a bit, okay, so I try to mark the swing highs, the swing lows, right, and any highs that might have happened or could potentially be a problem for our trade. So I make sure to mark those. And other than that, Mondays and Tuesdays, I'm just gonna trade Sensex. And once on the Tuesday the Nifty expires, I'm gonna trade on Wednesdays, Thursdays, and Fridays. I'm gonna trade Nifty. So yeah, thank you for this. Thank you for watching, and I hope to see you very soon with more profits.